Are you worried about your stocks in the next market crash? In this video, I'm going to talk about 15 stocks that'll help you survive a market crash, not if it happens, but when it happens. Now, before I begin, it's important to know that I'm not licensed in any way to offer investment advice. I'm not a financial advisor. This video is for informational purposes only. All right, so with that out of the way, stocks offer investors like you and I the ability to build wealth. And in this video, I'll be talking about the ones that can survive a market crash. Now, if you've seen one of my videos before, thank you so much for watching me again. Hey, I really appreciate it. And if you haven't seen me before, my name is Rick Orford, author of The Financially Independent Millennial. And if you happen to like personal finance videos like this one, well, now is a great time to go ahead and hit the subscribe button. That way you'll never miss one of my future videos. Now, this video is brought to you by Dividend. Dividend helps investors find high-quality income securities for their retirement and financial freedom portfolios. And the Dividend newsletter analyzes their top 10 high-quality dividend growth stocks each and every month. And folks, stay tuned because I'm going to be giving you a coupon code for a nice discount. All right, so investors have been spoiled in the last decade. The S&P 500 has gone pretty much up since the financial crisis in 2008. Now, yes, there have been sell-offs since then, like the one we saw in March and April of 2020 due to COVID-19. However, markets have recovered quickly and now sit at record highs. But investors should remember that bear markets happen and recessions are inevitable. So it's important that investors keep their cool when markets take a nosedive. Investors should resist the urge to sell their stocks and continue to hold quality blue chip stocks even though it's tempting to cash out when the markets are in a free fall. And by the way, here's a list of quality blue chip stocks to hold on to. All right, so let's begin with a list of 15 stocks that represent high-quality businesses that can generate strong profits and raise their dividends even during a market crash. The first stock to hold on to during a market crash is Walmart, a discount retail giant serving around 230 million customers every week. As a result, Walmart is one of the most recession-resistant businesses investors will find. Because it focuses on everyday low prices, consumers shop even more at Walmart when times are tough. And this was evident in 2020 when the coronavirus pandemic wreaked havoc on the US economy. In the fourth quarter of 2020, their total revenue increased 7% as comps grew 8.5%. And e-commerce growth is a significant driver for Walmart as more consumers are taking their shopping online. Walmart's e-commerce revenue increased 69% in the fourth quarter. Walmart also raised its dividend to $2.20 a share. Further, this was Walmart's 48th consecutive year of dividend increases, and they also approved a new $20 billion share repurchase program. The second stock to own during a market crash is McDonald's, the world's largest publicly traded fast food company with about 39,000 locations in over 100 countries. Approximately 93% of the stores are independently owned and operated. And over the past few years, its accelerated franchising activity has helped boost McDonald's profit margins and overall earnings per share. McDonald's competitive advantage is its global scale, a vast network of restaurants, well-known brand, and real estate assets. And McDonald's has raised its dividend every year since paying its very first dividend in 1976, qualifying the company as a dividend aristocrat. Number 3 on my list of stocks to survive a market crash is Hormel Foods, a company founded in Minnesota in 1891. And since that time, the company has grown into a food industry giant with nearly $10 billion in annual sales. The company sells its product in 80 countries worldwide, and a few of its core brands include Skippy, Spam, Applegate, Justin's, and more than 30 others. Hormel is also one of the dividend kings, having increased its dividend for 55 consecutive years. And its impressive dividend history is due to its strong brands. And according to Hormel, it is nearly 40 brands that are either in the number 1 or number 2 in their category. And if you want to know more about Dividend Kings, check out this video. It's actually my most popular video to date. Fourth on my list is Johnson & Johnson, a diversified healthcare company and a mega cap stock with a market cap above $400 billion. Johnson & Johnson is a market leader in pharmaceuticals, medical devices, and consumer products, and they generate annual sales of over $90 billion. The company has built a dominant business model and has produced 8% annual earnings per share growth over the past 20 years. And last year, Johnson & Johnson generated over $20 billion from free cash. That is incredible. Johnson & Johnson has also increased its dividend for 59 consecutive years. And with over 50 consecutive years of dividend increases, Johnson & Johnson is also on the list of dividend kings. Number 5 on our list of 15 stocks to survive a market crash is Lancaster Colony. Perhaps not the most well-known stock, but it has an awe-inspiring history. Lancaster Colony has been making food products since 1969. Then the company has experienced some incredible growth in the past 5 decades. A few of its key brands include Marzetti, New York Brand, and Sister Schubert's Rolls. Lancaster Colony makes various meal accessories like croutons and bread products in frozen and non-frozen categories. It also has one of the best streaks for dividend increases in the entire market, with fiscal 2021 representing the 58th consecutive year of dividend increases. Number 6 on our list is Atmos Energy, a company that can trace its beginnings way back to 1906 when it got formed in Texas. Since that time, Atmos has grown both organically and through mergers to a market cap above $13 billion. The company distributes and stores natural gas in 8 states and serves over 3 million customers. By operating in a stable and regulated industry, Atmos Energy can generate a return on equity of 11.5%. In addition, customer additions and rate increases provide for virtually assured revenue and earnings growth. As a result, the company has a long-term objective of 6 to 8% compound annual growth in its adjusted earnings per share. Shareholders naturally benefit from this growth through a rising dividend. And Atmos has increased its dividend for over 30 years in a row. Number 7 on the list of stocks to hold on to during a market crash is Procter Gamble, a consumer staple giant with an extensive portfolio of leading brands. Some of its notable brands include Pampers, Tide, Bounty, Charmin, Gillette, Old Spice, Febreze, Crest, Oral-B, Olay, and many, many more. The company generated $71 billion in sales in fiscal 2020. And Procter & Gamble has paid a dividend for 130 years and increased its dividend for 64 consecutive years. Wow, 64 consecutive years. Guys, give me a like if you think this is a good company to hold on to. I think it is. Number 8 on the list is BristolMyersSquibb, a leading drug maker of cardiovascular and anti-cancer therapeutics, with annual revenues around $42 billion. And the past year has seen the company transform itself due to its $74 billion acquisition of Celgene. For 2021, the company expects worldwide revenue growth in the high single digits. In addition, the company approved a $2 billion share repurchase program, which is a good sign for earnings per share growth. Ninth on the list is American Electric Power, a company founded in 1906 and has evolved its business model along with changing technologies to offer customers safe, reliable, and affordable energy. It's one of the largest regulated utilities in the United States and offers electricity generation, transmission, and distribution services in 11 states. Its energy sources are coal, natural gas, renewables, and nuclear. The company serves 5.5 million customers and has over $80 billion in assets with 40,000 miles of transmission. American Electric has paid 444 consecutive quarterly dividends on its common stock. In addition, it has paid a cash dividend on its common stock every quarter since July of 1910. Number 10 on our list of stocks to survive a market crash is PepsiCo, a global food and beverage company that generates over $70 billion in annual sales. It has a diversified business model that's roughly evenly split between food and beverages. The company's major brands include, Pepsi, Mountain Dew, Frito-Lay, Gatorade, Tropicana, and Quaker. PepsiCo has 23 brands that each generate at least $1 billion in annual sales. And 2020 was another gigantic year for PepsiCo. For 2020, revenue grew 4.8% to $70.4 billion. And PepsiCo is a blue chip stock and has increased its dividend for over 40 years in a row. Number 11 on the list is Comcast Corporation, a media, communications, and entertainment conglomerate. Its operating segments include cable communications, NBC Universal, theme parks, broadcast TV, and Sky. Though through these segments, Comcast offers high-speed internet, video, voice, wireless, cable networks, film, TV, and other services. Comcast generates over $100 billion in annual revenue, and the stock has a market cap above $250 billion. Comcast is one of the largest companies in the telecommunications and entertainment industry. And the cord-cutting trend is impacting the industry, but consumers still need internet service for streaming, and Comcast so far has been able to withstand the trend through its growth from other businesses. Now, before I get to number 12 on the list, remember that promo code I mentioned to you earlier? Well, guys, because you're watching this video, you can go ahead and use my coupon code FIM41OFF to go ahead and lock in savings of $41 a year and get instant access to Sure Dividend's newsletter with a 7-day free trial. I also went ahead and left you a link in the description below. All right, folks, so next on the list is General Dynamics, an aerospace and defense company that now operates 4 business segments: aerospace, combat systems, marine systems, and technologies. The company makes the M1 Abrams tank, Stryker vehicle, Virginia-class submarine, Columbia-class submarine, and the Gulfstream business jets. Maybe one day I'll get to fly on one. General Dynamics has revenue of nearly $38 billion last year, and the company-wide backlog is at a record of $89.6 billion, and the unfunded backlog is $41.8 billion, with the majority being in marine systems and technologies. General Dynamics is also a prime contractor to the military, and it has increased its dividend for 29 years. Number 13 on the list of stocks to survive a market crash is SJW Group, a water utility company that produces, purchases, stores, purifies, and distributes water to consumers and businesses in the Silicon Valley area of California and the area north of San Antonio, Texas. The company generates about $570 million in annual revenues, and its biggest competitive advantage is that it operates in 2 areas, Silicon Valley and Central Texas, both of which have seen high levels of population growth in recent years. As a result, These areas need improved water infrastructure to serve a growing client base. In addition, SJW is a dividend king with over 50 consecutive years of dividend growth. Number 14 on the list of stocks to survive a market crash is Verizon Communications, a company that got created by a merger between Bell Atlantic Corp and GTE Corp in June of 2000. Verizon is one of the largest wireless carriers in the country, and wireless makes up 3/4 of its revenues, and broadband and cable service account for the rest. The company's network covers 300 million people and 98% of the United States as it continues its rollout of 5G service. One of Verizon's key competitive advantages is that it's often considered the best wireless carrier in the United States. Indeed, they have an impressive amount of new customers and a very low churn rate. And their reliable service allows Verizon to maintain its customer base and enables the company to move customers to higher priced plans. In addition, Verizon is also in the early stages of rolling out 5G service. And last but not least, we have Lockheed Martin, the world's largest defense company. About 60% of the company's revenue comes from the U.S. Department of Defense. The rest comes from other U.S. government agencies, as well as international clients. The company consists of 4 business segments: aeronautics, which produces military aircraft like the F-35, F-22, F-16, and C-130. Rotary and mission systems, which houses combat ships, naval electronics, and helicopters. Missiles and fire control, which creates missile defense systems, and space systems, which produces satellites. Also, Lockheed Martin has increased its dividend for nearly 20 years in a row. Wow, that was quite a list, folks. Do you own any of the stocks that I talked about today? If so, go ahead and let me know in the comments below, because I love interacting with you all. In the meantime, if you haven't hit the subscribe button, now's a great time to go ahead. That way you'll never miss one of my future videos. See you guys.